as I've taught it today, and I'm done with it with the physical class students. So it is us who are a bit behind now, but I know by Tuesday we shall be even ahead of them, because I'm starting correction of errors today as well. I do 2 numbers, then the 3rd number I'll finish it on Tuesday as I complete it to start bank reconciliation. So guys, my appeal still stands. Please practice numbers. Practice numbers. I'll do a lot of numbers in class. I'll do very many numbers in class, but it still goes back to individual effort. If you want to gauge whether you've understood, you have to do numbers personally, or you have to discuss. Please discuss, please do numbers. I don't know why you guys have failed to start discussions, online classes, unless not started. Yet even my audit discuss to 9. But after 9, they start discussion. They go up to 11, start discussion. Number, June 2015, question 4. The number is about changes in equity. A statement of changes in equity. We did a number last class, our previous class, where we did a statement of changes in equity. And I told you this is a statement that shows movement in the company's components of equity. When we talk about equity, we are not meaning share capital only. Equity is it is a component. It is a word that stands for different items that form equity, and share capital is part of equity. Okay, share capital, share premium. We have retained earnings. We have other reserves. Okay, other reserves. Now, this statement shows the movement of the company's equity over time. Okay, it shows the opening balances of every component of equity, any additions, any deductions, and at the end of the day, it shows the closing balance, okay, per component of equity. And I told you, you draw the columns you draw, they should be equivalent to the number of reserves or components of equity you have in the question. So when you go to the question here, I'll not go through part A. Actually, I surprisingly asked part A to the physical class students, and they didn't know. And yet I taught this. Describe the components of a set of financial statements that must be prepared by an entity at the reporting date. So can someone tell us the components of a set of financial statements? Yes, Dent.
Good evening, CPA. We have, there are 5. We have a statement of profit or loss, statement of financial position, notes to the statement, statement of changes in equity, and then the cash flow statement.
Very good. Those are the components of a set of financial statements. Now, when I asked this question, the physical class students had started giving me elements of financial statements. And I'm very sure I taught this thing when I was teaching elements of financial statements. Actually, I began by giving a difference between elements of financial statements and the components of financial statements. This was our 3rd recording, okay? But that's not my emphasis today. My emphasis today is part B, okay? It's part B. The following is an extract of the trial balance from the books of KTL as at 30th November 2014. So they are giving us balances of different assets, liability, assets, expenses. Then we have share capital, purchases, sales, general reserve, evaluation reserve, profit or loss as at 1st December 2013, profit or loss as at beginning of the year. They are trying to give us retained earnings, okay? At times they call it profit or loss. As long as they put a date and the date is the beginning or the ending date, it is either retained earnings at the beginning or retained earnings at the end. So when you look at our reporting period of 30th November 14, it means this year must have started 1st December 2013. So this is the retained earnings as at the start of the year, profit or loss as at 1st December. Then we have share premium. So the examiner wants us to come up with a statement of changes in equity, okay? A statement of changes in equity. So before coming up with a statement, the skeleton of the statement or the structure of the statement, first look for how many reserves or how many components of equity do you have. Just look at these balances given and look out for those that fall under components of equity. One of them is ordinary share capital, okay? Share capital, that's number one. We have general reserve, because we said all reserves fall under equity, as long as those reserves don't have any restrictions, okay? Because some reserves have restrictions and they are not institutional capital. Depending on the industry where you operate in, the regulator can say the entity will always keep this reserve for ABCD. So if that reserve, if the objective of keeping that reserve is not part of our money, okay, then that reserve shouldn't be put under changes in equity because that reserve is not our money, okay? For example, I gave an example of the SACCOs. SACCOs, the regulations tell them to keep what we call education reserve. Education reserve, part of it, 50%, is meant to go to their apex body called WUKUSCO, okay? Uganda Corporate something, it's around Maganjo. So it means the education fund, 50% is not institutional capital. So if we are coming up with the changes in equity, we only consider the 50% of education reserve with the changes in equity, okay? Because these are institutional reserves we are talking about. So any kind of reserve should go under changes in equity, apart from those reserves whose objective are not actually about us as the entity, okay? Maybe the regulator instructed we should have a reserve, but the essence, that money will be used outside, not within the entity, okay? So here we have share capital, we have general reserve, we have revaluation reserve, we have retained earnings, we have share premium. So we have five components of equity that we have. So when you are coming up with your statement, you'll have, apart from the first column that has details or particulars, we shall have other 5 columns, okay? And column number 1 will be for share capital, okay? Column number 2 will be for share premium. I like putting these ones next to each other because normally they are almost. And then we have general reserve. We have general reserve. So you'll have as many columns as the number of what? As the number of components of equity. As the number of components of equity. Then we have revaluation reserve. Revaluation reserve. We have revaluation reserve. We have revaluation reserve. And then we have retained earnings, what they called profit or loss as at the start. So those are the retained earnings. And then our last will be the total. We shall have the total. So vertically, normally they don't have a lot of wordings vertically, so you don't leave a lot of space vertically because it is not normally. This is a small statement. This is a small statement. So this number that we are doing, the examiner set, and he was rewarding 15 marks for you to come up with the changes, with a statement of changes in equity. Just imagine, just copying, reading, interpreting, and pasting. you may find only 1 or 2 calculations, but the rest is reading, coming and posting, reading, coming and posting, okay? But all in all, we should know that this is a statement that shows the movement of the entity's equity over time. And we deal with institutional capital or equity. Institutional capital or equity. And the number of columns will be equivalent to the number of components of equity that you have in the question. So the company can keep as many reserves as possible. Okay, like SACCOs have very many reserves. We have the statutory reserve, we have the development reserve, we have the share transfer reserve, we have retained earnings, we have share capital. They can even keep a general reserve. They can keep an asset reserve, whereby each year we make a profit, we reserve a portion to that asset reserve. In case we want to acquire assets, we go to that reserve and pick money, we acquire assets, okay? So you can have as many reserves as you can, as long as you introduce them when you've made a profit. Some entities have a tendency of introducing reserves even if they are making losses, which does not add up, because it is from the profit that you reserve some money for future use, okay? So after doing this, we said you bring forward the balances. So balances brought forward. So when you go back to our question, share capital is ordinary share capital is 200,000, okay? 200,000. So you bring it here. You bring it here. Okay, 200,000. Then share premium, it is the last item, 6,000. 6,000. 6,000. Then we have the general reserve. General reserve is 80,000, is below share capital, 80,000. Then revaluation reserve, it is 4,000. It is 4,000. And then retained earnings profit as at 1st December 2013 is a debit of 48,000. When a profit is a debit, it means it is a loss, okay? When retained earnings is a debit, it means it is a loss, because retained earnings is part of equity. It should be a credit if at all we have money there. If we have accumulated profit, it should be a credit. And whenever you find it on the debit, retained earnings being on a debit, it means it is a retained loss, okay? A retained loss. So we have 48,000, it is on the debit. So it is a retained loss, okay? A retained loss. So therefore, you'll get the total here. You'll get the total horizontally. So I'm getting 242,000. 242,000. Any questions so far? So number one thing when you do, you have to bring forward the balances, okay? You have to bring forward the balances that were given. They give you marks when you are bringing forward these balances. Any questions so far? Any questions?
Excuse me, sir.
Yes, please.
The profit or loss is what you're calling retained earning?
Yes, this is retained earnings. I told you, if at all it is given as part of the balance, because these are balances the examiner gave, it is an extract of a trial balance. An extract simply means it is not the entire trial balance, but they just picked up figures of interest. Okay, it is an extract. And within the trial balance, we normally have retained earnings, okay? Retained earnings. So another language the examiner uses for retained earnings is profit or loss, but he must put a date. That's when you realize it is retained earnings. He must put a date. This date, when in our scenario, it is the opening date of the financial year, because the year ends 30th November. It means it begins 1st December, okay? So this is retained earnings as at the start of the year. Are we now together?
Yes, thank you.
Okay. So we are done bringing forward the balances. Our next issue is to go and read note per note as we post, okay? Where we need to calculate, we shall calculate and post. Where we just need to post, we shall just post. So note number 1 says, KTL transferred 2 million from the profit for the year to the general reserve account. So we are transferring 2 million from the retained earnings. Profit for the year, remember, profit for the year is taken to the retained earnings, okay? I think by now you know, because we have done presentation of financial statements. And you've realized that when we get the profit or loss for the year from the statement of profit or loss, we go and put it under retained earnings, under equity, when we are coming up with the balance sheet. By this time, you must be knowing that. So we are transferring 2 million from retained earnings to the general reserve, okay? So what you do, the retained earnings are losing 2,000 and the general reserve is getting 2,000, okay? So that's how we do it. This is just a matter of interpreting. You transfer. The language was you transfer. So we are transferring from the general reserve, from the profit for the year. Which profit for the year? I said profit for the year is taken to the retained earnings. Therefore, we don't have a column called profit for the year here. But in essence, you know that profit for the year goes to the retained earnings. So transfer 2 million from retained earnings, take it to the general reserve. Okay, and then here the narration will be transfer. Okay, transfer. Narration will be transfer. Or the under details, you say transfer. Or someone can say transfer from general reserve, from retained earnings to general reserve. But even if you say transfer, someone can just look at general reserve is positive, retained earnings is negative. So it means retained earnings, this money came from retained earnings. And the net effect on this horizontal line is 0. So in the total here, the effect is 0. Are we together, guys?
Yes, we are following.
Yes, please.
Note number 2. At 30th November 2014, land and buildings were revalued as follows. So land was revalued to 100 million and buildings were revalued to 295 million. And they're telling us non-current assets are depreciated at 2.5% per annum on reducing balance. So the main issue here is revaluation, okay? Land is being revalued to 100 million. The question is, what was the previous value of land? Okay, you go up here, we see land was at 80 million, but now it is being revalued at 100 million. From 80 to 100, the question is, what is the revaluation gain? What is the revaluation gain? You just get the current revaluation, 100,000, which is 100 million, okay? You less 80 million. You less 80 million. And what you get is the revaluation gain. So we come here and say revaluation gain. You come here and say revaluation gain. Revaluation gain, you put it under revaluation reserve, 20,000. Okay, revaluation gain, and in brackets you put land. This gain is in line with land. Because when land is increasing in value, we debit land, okay, and credit revaluation gain, okay, revaluation reserve, sorry, okay, and credit the revaluation reserve. So what we are ideally doing here is to increase our revaluation reserve by 20,000 because land gained in value, okay? Land increased in what? In value. Land increased in value. We shall also get the total horizontally. The total will be 20, okay? Then for the buildings, they told us buildings were revalued to 295. And the previous value of buildings was 300,000, was 300 million, okay? Was 300 million. So it means buildings are revalued downwards. So we are losing. Buildings we lost by 5 million because the current value is 2 95 million, and the previous value is 300. The previous value is 300 million. So it means buildings we are losing by 5 million. So we have a revaluation loss. We have a revaluation loss in line with buildings. In line with buildings. Therefore, you also go and post it under revaluation reserve, and we shall also have that horizontal total. Yes, Dennis.
How about depreciation? Doesn't it affect the revaluation loss or gain as we are depreciating assets? As assets depreciate, rather?
No, assets does not. Depreciation does not. Depreciation, we only consider depreciation when we are computing the expense to be taken to the profit or loss, but it does not affect the revaluation gain or loss. Okay? That's why we are not considering it in any picture, however much the examiner gave it to us. We shall consider it if we want, if we shall be getting profit or loss for the year. Okay? Are we together, Dent?
Yes, please, I've understood. Thank you.
Yeah, but for the sake of getting the revaluation gain or revaluation loss, we just compare the current value of the land vis-a-vis the previous value to see whether we have an increase or decrease. For the land, we had an increase of 20,000, okay, which we took as a revaluation gain. And for the buildings, we had a revaluation loss because the previous figure was 300,000 and the buildings are being revalued downwards to 295 million. So it means there is a decrease of 5 million, and that is a revaluation loss. That's why we have put it in brackets, okay? Note number 3, inventory at 30th November 14 was valued at 24 million. KTL expects to realize 27.5 from the selling of this inventory. KTL values inventory in accordance to IS2 inventories. Now, this one does not affect any of the components of equity, okay? Therefore, we shall skip it, but we shall use it when we are computing the profit or loss for the year, okay? Under cost of sales, because we need inventory, closing inventory, under cost of sales. So we shall use it when computing profit or loss for the year to be taken to retained earnings. But for the sake of components of equity, it does not affect it directly. So we skip it for now, okay? Note number 4. During the year to 30th November 14, KTL issued additional 40,000 ordinary shares at 2,100 per share. Okay? So we are issuing new shares, 40,000 shares, but we are issuing them at 2,100. So 2,100 is the market what? Is the market price, okay? 2,100 is the market price. Now, when you go up here, the ordinary share capital was stated at 2,000 per share. I think you are seeing it. And I told you in the previous class that this is the nominal value of the share because share capital is stated as nominal value in the books, okay? So the 2,000 is the nominal value of the share. The 2,100 is the market value. But you see that these are two different figures. In the market value, we have the nominal value and the premium, okay? Now, since the nominal value is 2,000 per share, and we are selling the share at 2,100, that simply means that the share premium is 100 shillings, okay? Because our nominal value is 2,000. So any excess of the nominal value is premium. So since we are selling at 2,100, the 100 shillings is the share premium. So now this is how we are going to compute it. Let me put it here. We are selling 40,000 shares, okay? And we are selling each share as 2,100. I told you I want to compute them separately. Normally, we did this calculation last week. I'm sure it is not new, okay? So if I want to compute the share capital alone, I'll compute 40,000 shares. I multiply it with 2,000 shillings. Why 2,000 shillings? Because it is the nominal value. It is the nominal value. Okay? It is the nominal value. And how much do we get? 40,000 times 2,000. We are getting 80 million. 80 million. Then if I want to get the share premium, I get 40,000 shares times 100 shillings. Times 100 shillings. And then I'll get 4 million. 4 million. Okay? So this transaction, these are the computations. Someone can combine it at once and it's like 40,000 times 2,100. And you get 84 million at once. But the challenge of this second transaction, you will fail to distinguish what is the premium, what is the share capital. Okay? So it is good to know that on the market value that has been given, 2,100, there is a nominal value, there is a premium. How do I get the nominal value? You can check the value at which the share was stated in the statement. That value is the nominal value. So any figure beyond it is the premium. So 2,100, 2,000 is a nominal value, and then 100 is the share premium. So you come here and say issue of shares, issue of shares, issue of shares. Then under share capital, we have 80,000. Remember, we are chopping off 3 zeros. And under share premium, we have 4,000. Have 4,000. Then we shall have our total as 84 million. Guys, any questions about that? This computation of issuing of shares? Any questions?
Please, on the share premium, is it 4,000 or 40,000?
It is 4,000 because it was 4 million. And we are chopping off 3 zeros. We got 40,000 shares times 100 shillings. I think we get 4 million. And since we are chopping off 3 zeros, we bring 4,000.
Okay, thank you.
Any other questions? Okay. Note number 5. A dividend of 210 per share for the year ended was declared. Okay. So 210 per share. So we have to compute the dividends that were given out. Okay. That were issued, that were paid out. Dividends that were paid out. But you must know, how do we get the dividends? The dividends, you have to get the number of shares, okay? Number of shares times dividend per share, okay? Times dividend per share. That's how we get the total amount of dividends. Number of shares times dividend per shares. Now, how many shares do we have? So we go back and see. We have the 40,000 shares that we have issued, okay? We have, first of all, the number of shares. We have the 40,000, okay, that we have just issued in note number 4. Then how many other shares do we have here up? Here up, they only gave us ordinary share capital of 200,000, and the nominal value is 2,000. But we can still go ahead and get the number of shares. How do you get it? By getting the 200,000 over 2,000, okay? You get the amount of the amount of money in shares that is 200,000 divided by the nominal value, if you want to get the number of shares. So you get the 200,000 number, the amount of money in shares divided by the nominal value. Okay, so 200,000 divided by 2,000. So we have 100 shares. We have 100 shares. These initial ones were 100 shares only. These ones, these 200,000 is a representative of only 100,000 shares. Yes, Jacob. Yes, Jacob.
Yeah, so we are going to even add those zeros up so that we get a clear answer.
Pardon?
Aren't we going to add zeros so that it becomes it becomes 200 millions? Then we divide the nominal value.
We add this. Okay. I think that will make more sense. 200 million, because this is 200,000 is 200 million, right? Because of the 3 zeros that were chopped, divided by the 2,000. Okay. So 200 million divided by 2,000, giving us 100,000 shares. Okay, 100,000 shares. But remember, we already have the 40,000 in note number 4 that we have just issued out. So making it 140,000 shares, okay? Times the dividends that they told us that each share will receive in note number 5. They told us a dividend of 210 per share. So this simply means how much are we recognizing? 140,000 times this. So the dividends are 29.4 million. Okay, 29.4. So you come and here and say dividends. Dividends are normally issued from retained what? Earnings. I think I've ever told you this. This is not the first time we are talking about it. So the dividends are normally paid out. So it is a negative. Okay, it is a negative. Dividends are always paid out. So under retained earnings, we put a negative. Put a negative. Because retained earnings will be reducing. Okay? So dividends are paid out from retained earnings. From retained earnings. Any other questions before we proceed to our last computation? Yes, Doreen. Yes, Doreen. You had put up your hand. Was it by mistake?
Mine is why didn't we add the 100,000 shares when we were writing down the statement of issue of shares? When we were computing for issue of shares.
Did we issue out 100,000 shares?
I thought so.
Yes? We issued out 40,000 shares, guys. Not 100,000 shares. Note number 4. We issued additional 40,000 shares. And the computation we did was for 40,000 shares. This is the computation. So I don't know why you want us to use 100,000 shares, yet we issued only 40,000. Okay, our last computation is profit for the year. You have to ascertain the profit for the year so that you can bring it under retained earnings, okay? Profit for the year. For the year. If it's a loss, we shall change the naming. But you have to compute the profit for the year. And you can only get the profit for the year when you compute, when you come up with a profit or loss statement. So in this case, we are not doing it as a full statement. It is just a working, okay? It is just a working. So we want to ascertain the profit for the what? for the year. It is just a working profit for the year. Normally, we shall begin with sales, you know. Sales, they were given, they gave us purchases and sales here. And sales are always credit. So 600,000 is our sales. So you bring it. We don't have sales return, so we shall go to cost of sales. It is just a working. Okay? Cost of what? Of sales. So it begins with opening stock. It begins with opening stock. Did they give us opening stock anywhere? Yes, inventory as at the start of the year, it is here, 1st December, 46,000. 46,000. And then we have purchases. We have purchases. These were given as 402,600. 402,600. Then we have closing stock. Closing stock, this was given in note number 3. The other note I told you that we shall jump. Inventory as at 30th November 2014 was valued at 24 million. But KTL expects to sell that inventory at 27.5. Okay? So the thing is, what figure are we taking? KTL uses IS2 inventories. What does IS2 talk about closing stock? Can someone remind us? We went through that at one time.
Stock is measured at the lower of the cost at the net realizable value.
Very good. We take the lower of cost and net realizable value. So of the two figures, which one is lower? Of course, 24 is lower. Therefore, stock will be valued at 24 million, okay? Stock will be valued at 24 million because it is the lower of the two. So it is the lower of 27 and 24, okay? So our cost of sales stands for, how much are we getting as cost of sales? We are getting 424,600. 424,600. Now, 424,600, when you less from the sales, you get what you call gross profit. You get what we call gross profit. So our gross profit is that figure, okay? Where we shall go to the expenses. I'm sorry, I'm rushing into this formula because we have done profit almost very many times. And by now, but by the way, I have a problem. If I've gone through something before, I don't want to waste a lot of time on it, okay? I don't want to waste a lot of, because I assume you guys have read it, have practiced it. Because we shall not be dragging to some things that we went through some time back, and yet we have other new things to cover. Okay? That's why I keep emphasizing practice, because you will not find a lot of hard time if I am speedy on these obvious things that we have gone through before. So when you look at the expenses that were given, we have general expenses here, 13.4, our second item. 13.4. So we have general expenses. 13.4. Then which other expense that was given? They didn't give us any other expense, but we have depreciation, okay? We have depreciation. So we come here and do what? And depreciate. We have depreciation, and we are only depreciating buildings. Note number 2, they told us they depreciate at 2.5, reducing balance. So we shall get 2.5 times the new value of the buildings, okay? 2.5% times the new value of the buildings, which is 295 million, okay? Because this is the new value of the buildings. This is the new value of the buildings. This is the new value of the buildings. Okay. So we shall have, this time was 29.5. So that is our depreciation. Therefore, our total expenses, how much are they? Because these are the only expenses we had. So our total expenses is 2775. So when you less it from our gross profit, we have a net profit. We have a net profit. So this minus this, we have a net profit of 154,625, which you will bring here as profit for the year under retained earnings. Okay. Yes, Speciosa.
So I wanted to find out, isn't the loss at the beginning of the year part of the expenses? And then
No.
also the reduction gain, is it not part of income?
Okay, very good questions. Loss as at beginning of the year, we said that is retained earnings. Okay, that is retained earnings. I told you at times the examiner will be calling it profit or loss, but he has to put a date. Then that stands for retained earnings. Okay, so and retained earnings are not put under profit or loss. We know that. Okay, it is not a component of financial performance. It is not a component of profit or loss statement. So that is a retained earnings balance brought forward. That's why we brought it forward here. 48 negative. Okay. Number 2, isn't a revaluation gain other incomes? The answer is no. When you go deeper into financial reporting at level 2, they will tell you revaluation gain does not go through profit or loss statement. Okay? Revaluation gain goes through other comprehensive incomes, and that's why we credited revaluation reserve, because that's where we find those in other comprehensive incomes. By the way, we call this statement profit or loss and other comprehensive incomes. It is not one statement. These are two statements. These are two statements. Only that at financial at level 1 we treat it as one statement, but statement of profit or loss and other comprehensive incomes, we first come up with a statement of profit or loss, and then below it we normally come up with other comprehensive income statement. Okay, so revaluation gain does not go straight to the profit or loss statement. It passes through other comprehensive incomes because this is a non-cash income. Are we together? However, revaluation loss, for it goes through profit or loss because you have already realized the loss. Okay, you have already made a loss. But for the gain, it goes through other comprehensive incomes. Any other questions?
So we are going to include the revaluation loss under the expenses?
Revaluation loss, by the way, I had even forgotten it. We had to include it under expenses. Thank you. We had to include it under expenses. I had forgotten it. For it, the standard allows, okay, to include it because it is already realized. It is already realized. Okay. So therefore, our profit is 149,625. 149,625. Okay, now after that you are done, we now get the totals. You get the totals. You get the vertical totals. Okay. So we did this statement last week, but it was a bit short. It was carrying 2 marks. So I felt we have to do a detailed statement so that it gives us more insights about a statement of changes in equity. When you add these horizontal figures, should give you that intersection 461. And when you add also the vertical figures, this vertical total should give you the same total. Should give you the same total. Any questions? Yes, Jacob.
Hey, Mr. Mathias. So if you asked for the balance sheet, do we take the figure at the end, or we need to take the share capital with its balances, share premium, general reserve, and we take their balances? What do we do?
We take individual balances in the balance sheet. We take these totals in the balance sheet.
Okay. Okay.
Okay, so that's what I had to do on changes in equity statement, but I know we had gone through it. Okay, let's go to the main topic that I have to teach today. The topic is called correction of errors. A topic that most of you take as if it is so hard, but it is one of the easiest topics that you can even finish within 20 minutes if you've mastered all the technicalities under this topic, okay? Now, we went through the types of errors one time. That was, I think, our fourth class when I was covering the accounting cycle, when I was covering the trial balance. We went through the errors. We saw the errors that can be revealed by the trial balance. We saw those that can't be revealed by the trial balance. If you remember very well, we saw those, and I'll not go through them again. So I'll go straight to the steps that we take to correct errors. When you want to correct errors, these are the steps you take. You may not find them anywhere, okay? You may not find them anywhere. I've used these steps over and over years, and they have worked. So, step number one, you must identify the error. So as you read the note, you read it with an aim of identifying the error that was committed by the accountant in that transaction. If you want to correct the error, because you can't correct what you can't correct what you've not identified as an error. So as you read, your main focus should be what error was committed. And the kind of error I'm talking about is not the type of error, that error of omission, error of commission, no. The error that was done when entering in the books. Did they debit what was not supposed to be debited? Did they credit what was not supposed to be credited? So what will guide you is your knowledge of double entry, something that I have sung ever since I think our third class, double entry, okay? Knowledge of your double entry will help you understand whether the entry that was passed is either correct or wrong, okay? Then step number two is correct the error. After identifying the error, your next step should be correcting it first. Some people want to pass the right entry without even correcting the error. Your step number 2 should be correcting the error. And step number 3 is pass the right entry. Now pass the right entry. What was supposed to be the right entry in the first place? Now you pass it. Okay? Now you pass it. After you have corrected the error, okay? Don't pass the right entry before you have corrected the error. Otherwise, you will forget to correct the error. Or you will think that what you have passed is the correction of error. No. You need to first correct the error, then you pass the right entry. And then the last step is compare the debit and credit. Okay? Compare the debit and credit of the transaction. Okay? Of the transaction. Of the transaction. Of the transaction. Of the transaction. If there is any difference, pass it to the suspense account. Pass it to the suspense account. The last statement simply means that not at every transaction we shall be having a suspense. We shall not have a suspense at every transaction of correction of errors. We only have a suspense if at all after correcting the error and passing the right entry, if at all the debit is not equaling to the credit, the difference is what we shall be taking to the suspense. But where you have corrected the error and you have passed the right entry and the debit is equaling to the credit, then there is no need of passing a suspense account. Okay? No need of passing a suspense account. Now, in simplifying this topic, there I normally give some areas that don't even need to think further. The areas that don't even require you to go through these steps. Okay? And these are the areas. I normally give them to simplify your life. Write them somewhere. We have what you call understatement. Understatement.
Pardon, you say the areas that don't what?
Let me first type them. I explain them at once. Then we have errors of omission. Then we have errors committed in the journals. Errors in the journals. And then lastly, we have, how can I state it? Where a single entry was made. Okay. Now I said, these errors that I've stated here, whenever you come across them, don't even think about the steps. Don't think about these steps because for them, we don't follow steps. They are obvious. How are they obvious? Errors of understatement or overstatement. At times, the examiner calls them undercast or overcast. They took a lower figure or they took an excess. And you just need to reduce or increase. Where they took a lower figure, you increase. Now, on understatement or overstatement errors, automatically suspense comes into play. Okay? Suspense automatically comes into play. One of your entries should be a suspense. Okay? But the suspense should be your second entry. You need to first correct the error, then the corresponding entry is a suspense. Okay? Don't begin by a suspense. For example, if purchases were undercast by 3 million, it means the figure of purchases they took less by 3 million, because undercast means they took less by less. Okay? So it means you have to increase purchases by 3 million because it was undercast by 3. So increase it by 3 million. Purchases increase by debiting. It means I'll debit purchases to increase them by 3 million, and automatically the credit will be suspense, 3 million. It's what I mean, okay? For example, sales have been overcast by 10 million. It means the sales figure they took is excess by 10 million, okay? Is excess by 10 million. What does it mean? I have to reduce my sales. And how do I reduce sales? By debiting. So I'll debit sales 10 million and I credit automatically suspense, okay? That's why I said for overcast and undercast errors, a suspense has to come into play automatically, but you need to first correct the error, then you pass a suspense. Errors of omission don't follow the steps, okay? Just enter the transaction the way it was supposed to be entered in the first place. Therefore, no suspense is expected on errors of omission, okay? No suspense is expected on the errors of omission. The transaction was never entered in the books. Therefore, simply enter it in the books. Pass the double entry that was supposed to be passed initially, okay? Initially. Hope I'm understood. Then we have errors that are committed in the journals, in the books of prime entry. When correcting these errors, you think of the accounts affected. Think of the ledgers affected by the journals, affected by that journal, affected by that journal. If you want to correct this error very well, think of the ledgers that are affected by that journal. Of course, by now I assume that you know the journals and you know what each journal does and the ledgers affected by each journal. We did numbers of that, okay? So that one, I don't expect a suspense on these errors that have been committed in the journals. I don't expect a suspense, okay? Then where a single entry is made, then here you introduce a suspense. Of course, introduce a suspense. Of course, you need to first pass the other entry that was not made, and then the corresponding entry goes to the suspense. For example, they can tell you, KTL received money from a debtor, but the accountant only entered the transaction in the cash book, and the corresponding entry was never completed. And you know that when you receive money from a debtor, you debit cash book and credit the debtor. But the examiner is saying the accountant only entered the transaction in the cash book. It means it is only the cash book that was debited. They didn't credit the debtor's account. So it means in correcting this error, you credit the debtor and automatically the debit is a suspense, okay? Because the other transaction, the cash book was correctly made, okay, they had passed a single entry. So these ones, you have to put much emphasis on them because they will not waste a lot of time thinking of what to do. They are straightforward. And we are going to find, we are going to come across very many of them. When reading the notes or the transactions in correction of errors, you must put emphasis on identifying the error. Therefore, there are some words you have to put emphasis on. The words debited, okay? The words credited. They will direct you, okay? They will direct you. The accountant debited. Ask yourself, did they debit the correct account? If not, it means that is the error, okay, that was made. If at all they debited the wrong account, did they credit the correct account? If not, then that is the error that was committed. You correct it, okay? So the most disturbing thing under correction of errors to students, it is identifying the error in the note, okay? The note. And I'm emphasizing it as you read, as you practice identifying errors. When you identify it and you know your double entry very well, correcting it is very easy, and passing the right entry is very easy. Okay? Any questions before I start on the numbers? Any questions before I start on the numbers? Okay. So we shall first do May 2018. Question 3A. Question 3A. Should we start?
Yes, please, we can start.
So the following statement of financial position was extracted and prepared by Hemp Enterprises Limited as at 31st December 2017. So they are giving us different items of the balance sheet, and one of them is a suspense account. I think you see it. It is under assets. Under assets. Okay. The junior accountant, Musana, while checking the books, discovered the following errors committed during the year ended 31st December 2017. They want us to correct these errors and also balance the suspense account. The suspense account should always balance at 0, okay, after correcting errors. I should also warn that some numbers in the question bank, at least I'm sure of 2 numbers that have errors in correction of errors. You may come across them. One is in 2017 and the other is in March 2022. I think question 6. Okay, even those numbers, I've done them several times and they have errors. Okay. Okay, note number 1. So they want us to pass journal entries to correct errors. So always number questions on correction of errors, you have to pass journal entries to correct the errors. And we said journal entries are the same as double entries. Okay. Journal entries are the same as double entries. So we have particulars, debit, credit. Particulars, debit, credit. So we are going to pass these double entries. Okay. Note number 1. An invoice of 4 million received in September 2017 from Bronze Traders was misplaced before it was recorded in the sales journal. Before it was recorded in the sales journal. Now, this is an error that is happening in the sales journal, in a journal. And I've talked about something. When an error is in the journal, we should not follow these steps, but we rather think of the ledgers that are affected by this journal. So what ledgers are affected by a sales journal?
CPA, pardon on the statement you said earlier that made us, that took us to the journal thing.
What ledgers are affected by the sales journal? It is the key question here.
CPA,
Guys, did we do journals or we didn't do journals?
So I feel it is cash or debtors accounts.
Guys, I don't know where to start from because
CP8 is sales account and debtors account.
sales account and the debtors account. Very good. Okay. So though the note was wrongly phrased by the examiner, because you can't talk about us getting an invoice from Bronze, because when we receive an invoice from someone, it means that person is demanding us money. Okay? Because we received an invoice. And again, at the end of the day, saying sales journal. So this was a sale that we had made to Bronze. It was not Bronze who was supposed to give us an invoice. It was us to issue an invoice to Bronze because we had sold to Bronze on credit. Because we know that a sales journal records sales made on credit. Okay? Therefore, us not posting in the sales journal, it means the sales journal was undercut. Okay? Because the invoice was misplaced, it was never recorded in the sales journal. That simply means the sales journal was undercast. Okay? The figure on the sales journal is less by 4 million. The sales journal, all the journals feed into the ledgers. I'll not go into detail. I taught that. Okay? The journals feed into the ledgers. Now, what does it mean? If our sales journal is undercast, is understated by 4 million, automatically the sales ledger and the receivables ledger will be understated by the same amount because the sales journal feeds into the sales ledger and the receivables ledger. Okay? Therefore, since the sales ledger is understated by 4 million and the receivables ledger is also understated by 4 million, so can we correct those errors now? That's why I said for the journals, think of the ledgers that are affected by that very journal, and as simple as that. Okay? And we have covered journals. So don't expect me to go back to tell you this journal records ABCD. This journal is affected by these ledgers. No, I will not do that, guys. I will not do that. At least I've done my work. Please, you also do your part. Okay? If it means going back to the recordings, revisit recordings. If it means discussing, guys, discuss. Otherwise, when I keep pushing back, when shall we complete the syllabus? Okay? So, understatement of the sales journal automatically understates the ledgers affected because the journals feed into the ledgers. Therefore, an understatement of the sales journal by 4 million, automatically sales are understated by 4 million, receivables are understated by 4 million. And understatement simply means the figures are low. Can you increase them? So how do we increase receivables? By debiting. So we shall debit receivables, trade receivables by 4 million. I'll chop off 3 zeros, okay? My amounts are in shillings or thousands. I'll chop off 3 zeros. So this simply means also our receivables are understated by 4 million, so increase them by 4 million. And at the same time, our sales are understated by 4 million, increase them by 4 million. Sales increase by crediting. Receivables increase by debiting, okay? It is as a result of understating the sales journal, okay? Automatically, the accounts that, the ledgers that are affected by the sales journal, they are also automatically understated because of the other omission of the 4 million, okay? Guys, have you understood that statement?
Yes.
Okay. Note number 2. The accountant credited a check receipt of 605,000 from a customer to a cash book as 560,000. The corresponding entry in the customer's account, though, was correctly made. So this statement means we don't have any issue with the customer's account. Okay? The customer's account, the entry made there was correctly made. So don't so the examiner does not expect to find any entry when correcting this error, any entry affecting the customer's account, because the examiner told you it was correctly made. So you have no deal with it. The issue here, the error that was made, when you receive money from a customer, what do you do? When you receive money from a customer, what entries do you pass?
You debit bank or cash, then
Credit customer to reduce.
And credits
Yes,
the
please.
customer to reduce. Very good. So what did they do here in the bank? What did they do in the cash book?
They understated the amount in the cash book.
What error was committed in the cash book?
Arithmetic error.
Is it?
I want you to tell me they did this instead of doing this.
Of commission.
Guys, I think at times when I'm
PP8
teaching, some of you don't
First of all,
actually.
PP8 is error of
First of all,
transposition.
when you receive money from the customer, you're supposed to the first thing when you receive money from the customer, you're supposed to debit, and for them and the accountant here credited. That is the first thing. Then the next thing, instead of these figures, you realize that they were interchanged. We have a 605 and a 560. So we're going to first look at I think here we're supposed to debit, but also we look for the difference between these two figures and we correct the error. Yeah, someone has said it, transposition.
Yeah, error of transposition.
So that's what I need. I don't want to know the type of error. I think I told you in the first place. Knowing types of errors will not help you correct errors. I can assure you that. I can assure you that. You will know the type of errors for the essay questions. But when we come to practical correction of errors, the types of errors will not guide you in correcting errors. All what you need to know is to tell me the accountant credited the cash book, yet we had received money, yet we are supposed to debit. That is the error that I want, okay? That is the error that I want. Then for the figures, we shall see how to handle, but that is number one error. When you receive money, you have to debit, but the accountant credited the cash book with 560. So now, that is, we have identified the error, okay? So can we now correct the error? When we are correcting the error that was posted on the wrong side, we pass a reverse entry to remove it, okay? Since the accountant credited the cash book, for us, we shall debit the cash book, okay, to reverse that credit the accountant put in the cash book, okay? Remember, he credited the cash book with 560, okay? The accountant credited the cash book with 560 instead of debiting the cash book with 605. So the error is the accountant credited the cash book instead of debiting it with how much? 560. So when you are correcting the error, you pass the reverse entry to remove the other credit. In accounting, we don't delete transactions. We don't delete, we pass reverse entries, okay? Therefore, by debiting the cash book with 560, you have reversed the error the accountant had made in the cash book. And then we are on step number 2. Step number 3, pass the right entry. The right entry, the accountant had to debit the cash book, okay? The accountant had to debit the cash book. So come and debit the cash book with the correct amount now, okay? With the correct amount of 605. Because the amount received on the check was 605, though the accountant had credited 560. So when correct it with the same amount the accountant had posted there in error. When passing the right entry, pass with the right amount, okay? And step number 4 says compare the debit and credit of this transaction. If there is any difference between the debit and the credit, the difference take it to the suspense account. So you realize that the debit of this transaction, we have 2 figures, whereas on the credit, we don't have any figure. We don't have any figure. Therefore, the debit is a total of 1165 and the credit is 0. Therefore, for us to balance this transaction, the entire total will be credited in the suspense account. So that's how we follow these steps. Identify the error. The error is the accountant credited the cash book instead of debiting it. Okay? So can you correct the error? Yes. Pass a reverse entry to remove that credit. So, and the reverse entry is a debit because here it had been credited. So debit the cash book with the very figure he had credited. At this level, you have reversed the error. Okay? Step number 3, pass the right entry. In the first place, he had to debit the cash book with 605. Then compare the debit and credit. The difference goes to the suspense. Am I communicating something?
I beg your pardon. I beg your pardon on pass the error because you mentioned pass the error and then you entered 605. Rather pass the right entry. The right entry.
The right entry, the correct amount that the check had was 605. Okay? The check you received was 605. But the accountant, for him, when he was crediting the cash book, he credited it with 560. Okay? That's why I said, when correcting the error, correct it with the same amount the accountant had posted there in error. Okay? That's why we corrected the error by passing a reverse entry, but of 560, because that's what the accountant had posted on the credit side, 560. But when we are passing the right entry, we pass it with the correct amount that was on the check, because you will not pass it on 560. And yet the check was 605. Okay? The statement is clear. The accountant credited the check receipt of that amount from a customer to the cash book as 560. So what is confusing you, Dennis?
First, I've got it. Because they said, he credited at first he credited the account by 560. So the second step here is correction of error. So we are debiting the 560. Yeah, I've got it. Thank you.
Okay. Any other clarification?
Excuse me, sir. I wanted to find out how about the debtors account.
The examiner have even highlighted that speciosa. The examiner is very clear. The corresponding entry in the customer's account, though, was correctly made. So you want to correct it as well.
Okay, assuming it was not also correctly made.
Of course, he would have told you how they posted there. Then you would have gotten direction of how to correct it. Okay? How to correct the error? It is only dependent on what error was committed. So now we can't assume because we don't know. Okay? It is only based on how the error was committed. That's when you know how to correct it. But then we can't say in case it was wrongly posted. Then how was it wrongly posted? It is the question. So not until we find a note that talks about otherwise that we shall know how to correct. Okay, that's why you can't cram errors. You can't, even if you are home. But what you read, you just need to know what I've given you, these basics. That the main important thing is identifying what error was committed. Okay, the moment you you can identify the error that was committed, you can always correct it, as long as you know your double entries. You can always, and I'm using a word always because I know, as long as you have identified that error, you can always correct it the moment you know your double entry. Nothing can fail you. The challenge is identifying the error. Okay? And that's why I told you in your discussions already, but I will not talk about discussions anymore. In your readings, you must emphasize identifying errors. Okay? Identifying errors. Guys, all along, by the way, the reason I'm feeling concerned, all along online students have been so organized and very serious, I can tell you. And most of my passes are from online. But this sitting, it is either way, guys. It is either way, but you still have time you still have 2 months. Okay? Your colleagues in the physical classes are discussing, I told you, every Saturday after class. They do discuss. And I think at times you see them posting numbers in the group on Saturday. When I've already left, they do discuss. At the end of the day, it is you to sit in the paper alone. Okay? Note number 3. The cells were correctly entered in the cash book, but the double entry to the corresponding account was not completed. The cells were correctly entered in the cash book, but the corresponding entry, double entry, was not completed. So when you make a cell, what do you do? What do you do? I talked about this error where a single entry was made. So this is an error where a single entry was made, because the examiner is very clear, a cell of that amount was correctly entered in the cash book. So we don't have any issue with the cash book. It was correctly entered there, but the corresponding double entry was not completed. So what is that double entry that was not completed? Guys, are we tired?
Sir, if it was a cash sale, then they didn't like they
They didn't debit cash or bank.
Read very well that statement.
No, they debited cash or bank. That is the cash book.
They didn't credit the sales.
Very good, Newton. Very good.
Double entry for sales, eh?
So they didn't credit the sales. Very good. So therefore, you credit the sales. You credit the sales with 7,680, and automatically the debit goes to the suspense. Because I told you up there that where a single entry was made, a suspense must come into play. But this one, I had already highlighted it somewhere, where a single entry was made, introduce a suspense. But before introducing a suspense, make sure you first need to pass the other entry that had not yet been passed. Then the corresponding entry goes to the suspense. Okay? Guys, I finished teaching double entry. That's why I'm not so concerned about double entry. I think I did my part. So it is now your part. It is now your part. Because ideally these things will be done by you in class. So in exams. Note number 4. A discount received 102,000 was credited to the discount allowed account as 210. The corresponding entry was correctly completed. Okay? Discount received of 102 was credited to the discount allowed account as 210. So what was the error that was committed here?
Instead of debiting the discount allowed account, it was credited instead.
No, that is not the error. You've not read very well. That is not the error.
I think when we receive a discount, we are supposed to credit the discount received account, and then we reduce the payables account by debiting it. So here they are saying that they received a discount of 102, but it was then credited to discount allowed. So they interchanged their account. Instead of putting it under discount received, it
I think we lost Lens.
was put on the correct side, but in the different name of T account.
Okay, then
So
you have
saying
used, you have used a lot of words. I want you to tell me the error they committed.
Yes.
They did this instead of this. It is enough. Then you have used a lot of words, of which some of them I know most of your colleagues have now gotten confused.
They entered discount received the amount under CPI. I don't know if I've been clear. Hello.
We have lost you along the way.
I was saying they debited, rather they credited discount received under discount allowed. The error, the entry was put on the credit side, yes, but it was supposed to be it was put on the credit side of the discount allowed instead of the credit side of the discount received.
Okay, that was the error that was committed, full stop. Okay, all what you've been explaining, you are just confusing yourself. When you are identifying the error, it is always spot on. The phrase is very clear. A discount received was credited to the discount allowed. Already that is an error. Because now it was supposed to go in the discount received account. Again, you are posting it in the discount allowed. That is the error automatically. Okay? So the discount received was credited to the discount allowed as 210. That was the error. They credited a figure in the discount allowed, yet it was not supposed to go there. So can you reverse it from the discount allowed account? Okay? They credited the discount allowed with 210. So can you reverse it? Since they credited, you debit discount allowed to reverse that amount. Okay? You debit it to reverse that amount, 210, to remove it from the discount allowed account. Okay? Because they credited discount allowed 210. It is a wrong figure that was even put there. But you, when you are correcting, correct that very wrong figure, because that's what was posted there. Okay? They credited. When I was beginning, I told you, put emphasis on these words. I had a reason as to why. Okay? I had a reason as to why. Because they give you direction. They give you direction. When you read, they credited to this account, ask yourself, was this account supposed to be credited? Okay? I mean, this is a discount received. Again, why are you telling me it was credited to the discount allowed? And yet it is a discount received. Okay? No, errors are very easy to identify. Very, very easy. As long as you put, you put in some attention when you are reading a note. When you are reading a note. So we have reversed the error. They had posted in the discount allowed account on the credit side. So for you to remove it, you debit discount allowed. We have now corrected the error. Can you pass the right entry? The right entry, this was a discount received. Therefore, we had to debit discount. We had to credit discount received, because discount received is an income. We had to credit discount received with 102, because the correct amount is 102 that was received. Now we have passed the right entry. Okay, we have credited discount received. So compare debit and credit. The debit has 210, the credit has 102. It means the credit is lower. So our suspense will be put on the lower side, the difference, that is 108. Okay, to make sure that the debit balances with the credit. Any questions about note number 4?
APA, for me, I'm just requesting for clarity. Aren't we supposed to have an account for suspense whereby we are entering these suspense figures that we are getting?
No, you can't do them concurrently. You do it at the end of the journal entries. We shall do them because it was asked. We do it at the end of the journal entry. That's why they asked a suspense account after passing entries correcting errors. Are we together, Dent?
Yes, please, I've understood.
Any questions about note number 4? Note 5. The purchases account was undercast by 23137. Undercast, overcast errors, I told you don't waste your time. You have to correct that error that was undercast or overcast, and the corresponding account goes to the suspense. So purchases were undercast by 23137. It means purchases, they took a lower figure. Can you increase the figure? And purchases increased by debiting.
Debiting.
So debit purchases, automatically the credit goes to the what? The suspense. Shouldn't waste time in exams thinking of undercast, overcast errors. Note number 6. Motor vehicle repairs 840 was credited to the motor vehicles account 840. The corresponding entry in the cash book was correctly made. So the cash book has no issues. Therefore, when correcting, don't even bother passing any entry in the cash book because it has no issues. Okay? The issue is about the other motor vehicle repairs and motor vehicle account. So what error did we commit here? What error did we commit here?
But they entered motor vehicle. They entered the repairs under the motor vehicle account.
Under the
expense, the expense, which was the repairs, and then the motor vehicle is an asset. So they entered the figure of repairs under the asset, which is the motor vehicle.
Very good. So how do we correct it? It means we shall reverse the figure from the motor vehicle account, right? Because it was not supposed to be a figure to be posted in the motor vehicles account. So you reverse it. So motor vehicles are normally debited. So when you are reversing a figure, we shall do what? What are they saying? Motor vehicle account was credited, okay? Was credited to the motor vehicles account. So they had credited in the motor vehicles account. So can we remove it by debiting motor vehicles, right? We shall debit motor vehicles account to remove that figure because it had been credited there. So debit to remove that figure. You have corrected the error. Very good. Can we pass the right entry? What we are supposed to do in the right place is to debit repairs account, because repairs are expenses. Okay? We are supposed to debit repairs. So we have corrected the error by reversing the other credit that had been posted in the motor vehicles account. We have debited the motor vehicles to reverse that credit. We have debited repairs to pass the right entry. Then compare the debit and credit. Here we have a suspense, okay? Because the debit has 2 figures and the credit has 0. So we shall have the total 1680 as our suspense figure. Okay, good. Note number 7, which is our last note. Goods worth 2,340,000 taken by directors for personal use were not recorded anywhere in the books. So this is an error of omission. I told you errors of omission don't introduce a suspense, but rather pass the entry the way we are supposed to pass it in the first place. Okay? Pass the entry the way you were supposed to pass it in the first place. So what do? This is a drawing of goods, 2,340. So we debit drawings, okay? 2,340, is it 2,340? You debit drawings and credit inventory, because these are the goods that are being drawn. So our inventory will be reducing. At times we said debit drawings or share capital, because drawings finally affect the share capital, okay? They finally affect the share capital. So this is the number, the journal entries they wanted us to pass, and they want us to pass the suspense account. They want us to pass a suspense account to balance it very well. So we have details, we have amount, have details, we have amount. I know by the time we finish today's class, you will have picked, for those that have not picked in this first number. So we are going to see whether our suspense is balancing. When you look at the balances the examiner gave us, we had a balance of a suspense. Now, where to put the balance brought forward is also an issue to students. Okay? There's also an issue to students. Now, the suspense account, the suspense balance was put under assets. Therefore, the balance brought forward will be on the debit side because the suspense is under assets. So 18,410 will be put on the balance brought forward will be put on the debit side because the suspense balance was given under assets. If this had been given under liabilities, the balance brought forward would have been on the credit side. Hope we are together, because we found cases where students don't know where to bring this balance brought forward, where they don't know where to bring the correct side. Okay, the correct side. Okay. Now, when bringing these figures of the suspense, now you go back to your journal entries that you have passed. Whichever entry has a suspense, you bring the figure this side. Note number 1 did not have a suspense. Note number 2 has a suspense on the credit side. So you come here and put it on the credit side. The suspense was about cash. Okay? Put it on the credit side. Note number 3 has a suspense on the debit side, and it is on the what? On the debit. It is about sales, but it was on the debit side. Note number 4 has a suspense. It is about discounts, but on the credit side. Okay? It was about discounts, but on the credit side. Note number 5 has a suspense about purchases on the credit side. On the credit side. On the credit side. Note number 6 has a suspense on the credit side, and it's about repairs. It was about repairs and motor vehicle. Then note number 7 has no suspense. So where the suspense was posted in the journals is the same side where you bring it in the suspense account. Okay? The suspense was on the credit side on note number 2, we have brought it on the credit side. It was on the debit side on note number 3, we brought it on the debit side like that. And we expect that this account balances automatically. We expect that that suspect should be balancing automatically without any balance carried down in it. Okay? Any questions, guys? Any questions? Okay, silence means that we are good to go. I want us to go on the second number. I want us to go on the second number. We want to do the second number. The third number, I'll do it on Tuesday. Okay. Okay. Because part of my time was consumed by changes in equity, which I thought that it is also equally important to emphasize. So May 2019, question 5. May 2019, question 5. So the number also is about correction of errors. Part A is asking about explain the qualitative characteristics that enhance the usefulness of financial information. I think we covered this. Can you give me these points, chap, and we proceed? What are the qualitative characteristics that enhance the usefulness of financial information? Yes?
Comparability.
Yes, Wycliffe?
Faithful,
I think it's
comparability,
comparability, verifiability, timeliness, and understandability.
Very good. Those are what we call qualitative enhancing characteristics. Then the others are called qualitative fundamental, the other two. Okay. The accounts clerk of Moody Traders extracted a trial balance as at 31st December 2018, but it failed to agree with total debits being more than credits by 22,410. So the debits were more than credits by that amount. On further scrutiny, the following errors were discovered. So we are going to do this as well. And I will just copy this and paste it and remove the figures. Okay. Okay. So here we are. Note number 1, repairs of machinery, 4.5 million, had been charged to machinery account. Charging means had been posted, okay? Had been posted. So we have repairs of machinery 4.5 had been posted to the machinery account. So the error that was made, instead of debiting the repairs account, they instead debited the machinery account. That was the error that was made. So can you reverse this figure, remove it from the machinery account by crediting machinery, okay? By crediting the machinery account, by crediting the machinery account, 4.5, okay? And so we have corrected the error, we have reversed the error because they had charged it to machinery, they had debited it to machinery. So you have to credit machinery account to remove it. Then number 3, correct the error. So in the first place, we had to debit the repairs, okay? The repairs account. We had to debit the repairs account 4.5. So do we have any difference between debit and credit? No. Therefore, we shall not have a suspense account here because the debit is equaling to the credit account. Repairs of 4.5 had been charged to machinery account. They had been posted to machinery account. So you reverse it from machinery by crediting the machinery account and then pass the right entry by debiting the repairs account. Are we together on that entry?
Yes.
Yes.
Okay. Note number 2, the sales journal had been undercast by 6.5. The same issue we had in the first number. This is an error being made in the journal. Therefore, it will affect the 2 ledgers that are affected by the sales journal, okay? And those ledgers, we know them very well. That is the receivables account and the sales account. It means since the sales journal is undercast by 6.5, likewise, the sales account is also undercast by 6.5, and the receivables account is also undercast by 6.5, because the sales journal feeds the sales account and feeds the receivables, okay? Therefore, we shall increase our receivables, we shall increase our trade receivables, and also increase our sales by 6.5, by 6.5. That's how we had to do it, but we had done it in the first number. Any errors that is made in the journals, please don't introduce a suspense, but think of the ledgers that are affected by that journal. And for you, to get those correct ledgers, you will be guided by the role of that journal, which I don't want to go back, that a sales journal does this, a purchases journal does this. What? No. You go back and listen to class number 4. We did all those, and even we did numbers. Okay? Then number 3, purchase of a motor vehicle, 15 million, was entered in the purchases account. I think you can easily see the error here. This is a motor vehicle. You're supposed to debit a motor vehicle account, but what did they do? It was entered in the purchases account. A purchases account records inventory that is bought for reselling, okay? So instead of debiting motor vehicles, they debited the purchases. So can you remove the figure from purchases? By crediting the purchases account, 15 million, then you have corrected the error. Can you pass the right entry? By debiting the motor vehicle account, 15 million. Is there any difference between debit and credit? No. Therefore, we don't have any suspense here, okay? The credit in the purchases, you are reversing the entry that had been made there. So you are correcting the error, okay? Removing the 15 from the purchases, because purchases are debits. So when you are reducing them, you have to credit them. Then the debit in the motor vehicle, it is the right entry that you have passed. Then you have compared the debit and credit, and it's balancing. You don't have any difference. Therefore, no suspense. We proceed to note number 4. Should we proceed to note
Yes,
number 4?
please. Yes.
Okay. Note number 4, payment of 7877 to Mwamba, a supplier, okay, to Mwamba, a supplier, was properly recorded in Mwamba's account, but was wrongly recorded in the cash book as 7787. A payment to Mwamba, 7877, a supplier, was properly entered in Mwamba's account. So guys, when correcting this error, don't disturb Mwamba's account. The supplier's account is very okay. Altogether, according to the examiner, it was properly entered in Mwamba's account, but wrongly posted in the cash book as 7787. You realize the figure that was posted in the cash book is lower. By how much? Guys, it's lower by how much?
900.
By 900.
No.
By 90,000.
By 90?
Yeah, 90,000.
It is lower by 90,000. Now that simply means that the credit side of the cash book is undercast. Are you agreeing with me? Because when you are paying a supplier, we normally debit the supplier's account and credit the cash book, right?
Yes.
Now, since you credited the cash book with a lower figure, it means the credit side of the cash book is undercast, right?
Yes.
Yes, by 90,000. The credit side of the cash book is lower by 90,000. So can you increase the credit side of the cash book? So can you credit the cash book more by 90,000? And since it was just undercast, the corresponding figure goes to the suspense.
Okay.
You don't have to disturb the supplier's account. The examiner told you Mwamba's account was properly recorded. Therefore, don't disturb it. The issue is on the credit side of the cash book, where you took a lower figure. So can you credit it more by the difference? Okay? We have credited the cash book more by the difference. And since it had been undercast, the corresponding figure goes to the suspense. Because we said undercast or overcast errors, you have to introduce a suspense. Are we together, guys?
Yes.
Yes, please.
Note number 5. An incoming credit note of 8.8 million was properly recorded in the supplier's account. Was properly. Guys, I like highlighting these things because they guide you not to tamper with their accounts, not passing any entry on their accounts. Because the examiner is like, this was properly recorded. Okay? So an incoming credit note of 8.8 was properly recorded in the supplier's account. So it means the supplier's account, we shall not even pass any entry on it. Okay? But wrongly recorded in the purchases returns account as 9.8. I think you see the error. The error is the wrong figure that was posted in the purchases returns account. So an incoming credit note. A credit note is a document that comes from a supplier to a customer as evidence that the supplier has accepted your returns that you made, okay? The purchase returns you made to them. So when you receive a credit note, you debit the supplier and credit the purchase returns. Are we together? But they are telling you the supplier's account is correctly posted, therefore don't debit it anymore. It is correctly posted. The issue is you went and credited the purchase returns with a higher figure, with 9.8 instead of 8.8. So the purchase returns, the credit side of the purchase returns is actually overstated, okay? Is overstated. So can you reduce? Remember, purchase returns are normally credited, okay? So you credited it with 9.8. Can you reduce it with the difference 1 million? We shall reduce it by debiting purchase returns. Remember, they are credits. So you reduce them by debiting them by 1 million. And since it is an overcast error, the corresponding entry goes to the suspense. Okay? To the suspense. I don't know whether you've understood this. Purchase returns, instead of crediting it with 8.8, they credited it with 9.8. So you had to reduce the overstatement by a reverse entry, which is a debit, because purchase returns are always credits. So when you are reducing them, you debit it by the overstatement. Are we together, guys?
Yes.
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 Note number 6, opening inventory was undercast by 4.5. So we have to increase opening inventory. Inventory is always, it increases by debiting, okay? So debit inventory, 4.5, and the credit suspense, since it is an understatement error, and you are done. And you're done. Okay? You realize that most of these errors in this number, we are not even following the steps because most of them fall under understatements, overstatements, understatements, overstatement, and single entry. Okay? And single entry. Just a minute. Just a minute. Okay, let's proceed. Let's proceed. Let's proceed. Note number 7. Dividends received shillings 9 million were debited to directors' salaries. This transaction was recorded correctly in the cash book. So when correcting this error, please, we don't need to tamper with the cash book because they entered it correctly, okay? So now, what error did they commit here? What error was committed here?
The dividends paid were entered in the salaries account.
These are dividends received, not
yes,
paid.
the dividends received were debited in the salaries account.
Okay, so now we shall remove them from salaries, right?
Yes,
because
please.
they were debited in the director's salary. So can you remove them? Since they were debited, we shall credit. Okay, we shall credit the
Salaries account.
we shall credit the director's salaries. Remove them 9,000. This one you have corrected the error. Can you pass the right entry now? Because number 1, we have identified the error. Number 2, we have now corrected the error by reversing. Number 3, we need to pass the right entry. What do we do when we receive dividends? We credit dividends received, okay? Because it is an income. Dividends received, okay? Dividends received account, you credit it because it is an income. All incomes are credits, okay? And then step number 4, compare the debit and credit. The debit has 0, the credit has 18,000. So this difference goes to the suspense, 18,000. Any confusion in that, in those entries? Any confusion in those entries? Guys, where you have to follow the steps, follow them, because it will guide you. Identify the error, correct it first by reversing, then pass the right entry, compare debit credit, the difference take it to the suspense. But where the errors fall under these categories, just correct, then automatically suspense. Then omission, you have to make sure that you pass it the way it was supposed to be passed initially. Any question on note number 7? Okay. No, note number 8. Note number 8, they are telling us that purchase of land, 9 million, cash was omitted from the books. So errors of omission, we said you enter it the way you were supposed to enter it in the first place. So they purchased land, they didn't record in the books by cash. Okay? Can we pass it by debiting land, because land is a non-current asset, it is an asset, it has to be debited, and credit the cash or cash book, because we used cash to close that transaction. Okay? So errors of omission, please never introduce a suspense, but rather enter it the way you were supposed to enter it in the first place. Okay, note number 9. Note number 9, discounts received 660 were debited to the discount allowed account. The error that was made, instead of crediting discount received as an income, they instead debited that figure to the discount allowed. Okay, that was the error committed. So we need to remove that figure from the discount allowed account. Remember, they debited discount allowed. They debited discount allowed instead of crediting discount received. So can you remove that figure from the discount allowed? Since they debited discount allowed, we shall remove it by crediting discount allowed. You credit discount allowed to remove that debit that they had posted there, 660. So this transaction is reversing the debit that was debited in the discount allowed account. So we have credited to reverse this debit. Then can we now pass the right entry? Discounts received are always credited, okay? Discount received, we credit it because it is an income. Then step number 4, compare the debit and credit, and the difference goes to the suspense. The difference goes to the suspense. The difference goes to the suspense account. Any questions? Guys, any questions? Hello?
No, we continue.
Okay. Note number 10. The disposal proceeds from the sale of machinery, 4,250, were debited in the disposal account. The corresponding entry was correctly passed. A correct entry was correctly passed in the corresponding account. Now, when we dispose of assets and we get proceeds, these are the double entries that we pass. We debit the cash or bank, okay? From the sale proceeds, we debit cash or bank and credit the disposal account. These are the correct entries that we have to pass. So what did they do? Disposal proceeds of that amount were debited to the disposal account. So I think now you see the error that was committed. This is the error that was committed. Instead of crediting the disposal account, they debited the disposal account. They debited the disposal account instead of crediting the disposal account. Because the correct entry, you have to credit the disposal. But what did they do? They debited disposal. That was the error that was committed. So can you reverse it? Can you remove that debit in the disposal account? Yes, by crediting disposal. So you credit the disposal account to remove that debit that was put, okay? To remove the debit that was posted there in error. They debited the disposal account. That is the error. So reverse it by crediting disposal. So now we have corrected the error. Can we pass the right entry? The right entry, they had to credit disposal. So can you credit disposal again to recognize the correct entry? Then compare the debit and credit. And the difference goes to the suspense, 8.5. Okay? The first credit is reversing the error, the debit that was posted there in error. The second credit is passing the right entry. Are we together, guys?
Yes.
Then are we together?
Yes. Yes, CPM. But when you go back on the areas that do not require the steps, you said where a single entry was made, you introduce a suspense.
Yes.
Oh.
Yes.
And here they said that the corresponding account was correctly entered.
Yes. So here they didn't make a single entry. What they did, and the corresponding account they are talking about is the cash book, okay? Is the cash book because you received the money, okay? Now here what they did, they debited the cash book, okay? If you can read what they did, they debited the cash book and debited disposal. So they didn't have any credit because the examiner said the disposal proceeds from the sale of machinery were debited in the disposal account. Okay, it means they debited disposal, but they go ahead and tell you the correct entry was passed, and the correct entry in the corresponding entry, it is the cash book. It means they also debited the cash book. Okay, it means they didn't credit the disposal account. So what we have done is to reverse this debit of the disposal that had been put there by crediting disposal to reverse the debit that was posted in error. Then the second debit is to pass the right entry. Then you compare the debit credit. The difference goes to the suspense account. Okay. Is it a rule for suspense account to be always on top? No. It is not a rule, only that I'm used to put debits as my first transaction. But in exams, even if you don't put it as first transaction, you will be marked right. But I'm just used that I debit first, okay? I put debits first, okay? So, yes, please.
Is it right if I call one disposal reversed? I put a word reversed in brackets to avoid
yes,
confusion.
It is verified in brackets. You put it in brackets reversed. Or reversed.
I get one disposal. Okay.
Yes, Mr. Sipia.
Yes, please.
Yes, you are talking to Dennis also. We are two Dennis.
Yes, Dennis.
So, yeah, I was with the view that, like my brother also said, I was with the view that the second disposal, I call it disposal procedure account in order to distinguish it from the other disposal account.
Okay.
Is it okay?
It is very fine. Now we can say this one is reversing the error. Okay. Always the first one should be reversing the error. Okay. It should be correcting the error. Okay. And then the second one should be the correct entry. Are we together?
All right.
Yeah, it is okay. It is very fine. Then our last note says, purchases of 9.7 on credit from John Mwase were credited to Paul Mwase's account. Okay, so this you bought goods on credit from John Mwase. Instead of crediting John Mwase, you instead credited Paul Mwase. Remember, when you purchase on credit, you debit purchases and credit the supplier. Okay, you credit the supplier. In this case, we credited a wrong supplier. We credited Paul Mwase instead of John Mwase. So can you remove the transaction from Paul Mwase's account? Okay, so Paul Mwase was credited. Can you remove him by debiting Paul Mwase? Remove the figure by debiting Paul Mwase, and by debiting Paul Mwase, you are removing the credit that you had posted there. And can you go ahead and pass the right entry by crediting John Mwase? Because John Mwase is the correct supplier from whom you bought on credit. Therefore, you had to credit John Mwase instead of crediting Paul Mwase. So we don't have any suspense there. So can we come up with a suspense account, chap, then we call it a day. We call it a day. Details, amount.
PPA.
Yes, please.
On transaction number 11, the
Yes,
Mwase transaction.
Yes, please.
Am I correct if I say trade payable, then I put these names in brackets?
It is very fine, because these are payables.
Okay. Okay.
Now, when you look at this number, it was very hard. It is very hard for a student to know on which side the suspense account balance should be put, because the balance was given in the introduction. The examiner told you the trial balance refused to balance. Okay, it failed to agree with total debits being more than credits by 22,410,000. So if I may ask, on which side should we put the suspense account? The debits being more than the credits. So on which side is the suspense account?
Credit side.
Pardon?
Credit side.
On the credit side.
Very good. Your colleagues in the physical class got confused about that, because if the debits are more than the credits, it means for you to balance a trial balance, the lower side is where you have to put a suspense, okay? The lower side, which is the credit. So therefore, the balance brought forward is on the credit side, because the debits were more than the credits. So for you to balance the trial balance, the lower side is where you put a suspense, okay? Then we shall go and use the same trick. Note number 1 did have a suspense. Note number 2 did not have a suspense. Note number 3 did not have a suspense. Number 4, we have a suspense on the debit, and that's about cash book. The debit cash book, and it's 90. That's not number 4. Number 5, we have a suspense on the credit. 1,000. It's about returns. Okay. It's about returns. Note number 6, we have a suspense on the credit. It's about inventory. That's number 6. Number 7, we have a suspense on the debit. 18,000. That is about dividends. Then note number 8, we don't have a suspense. Note number 9, we have a suspense on the debit. 1,320, and this was about this. Is it discount? Yeah, discounts. Okay, that is note number 9. Note number 10, we have a suspense on the debit. Note number 10, we have a suspense on the debit. It's about disposal. Yeah, those are the suspenses those are the figures we had on the suspense. So when we add through, our suspense should balance automatically. Our suspense should balance automatically. However, I normally tell students, even if the suspense has not balanced, please proceed. Don't cross out your work, proceed. Okay? Proceed. Because they mark entry per entry, they don't mark totals. Please proceed. But I can assure you, if you follow the steps that we have followed, your errors will always balance. They will always balance. So please, let us be following those. In our Tuesday class, I'll begin with a number on correction of errors. There is something I want to teach on correction of errors. I know these first ones will be the same, okay, but there is something I want to teach on correction of errors, of which when I finish it, we shall go straight away to bank reconciliation. To bank reconciliation on Tuesday. So please don't sit back. We have very many numbers that you can try out in the question bank about correction of errors. Please try out on individual basis. On individual basis. But there is a number we shall try out on March 2021 in class together, and then we go to bank reconciliation. Unless if I have a question. Unless if I have a question. Those with balances, please, you should be planning to pay the balances to avoid any inconveniences. I also remind you about the deadline for registration at the Institute of Certified Public Accountants. Registering for exams, please, that is 31st March. Please put it into your programs as well. Any questions?
PA.
Yes, please.
Hello. I'm just requesting for clarity. Under the guiding principles you gave us, you said if it is an understatement or overstatement, an undercast or overcast, we'll go straight and look at suspense accounts. But when it came to a narration which has, because I remember you doing it, a narration which has any type of the journals, you consider the rule of errors in the journals, right? For example, sales journal was undercasted, so you don't go back to the other guiding principle of understatement and overstatement. Is that correct?
No, but I think I wrote these things here. Then.
Yes, I understood them, but I'm just actually that is the part which is giving me a time here.
Then we have done notes on journals, 2 notes, and I was very clear, even I wrote it, that errors in the journals, think of the ledgers affected by the journal. Otherwise, if they were affecting suspense, I would have put suspense there. Okay? In the journals, even if it is understatement or overstatement, as long as it is a journal, don't think of suspense, but think of the ledgers that are affected by the journals. Okay? And then it means those are the ledgers that are understated or overstated. And since there are 2 ledgers, of course there is no space for suspense because these are 2 ledgers. Okay? If both of them are understated, like the way we have seen for the purchases and sales, so you increase like the way we have seen for receivables and sales. It means you increase the receivables and you also increase the sales. So now, where will you get the journals? Where will you get the suspense now? So even if you have an understatement or overstatement in the journals, please don't bring the suspense. However much I say, any understatement, overstatement, that works, but other than journals, okay? An understatement or overstatement in the journals, don't bring any suspense anywhere. Think of the two ledgers that are affected by that journal. Then treat them accordingly. If they were understated, increase them. Because these two ledgers, one is a debit, the other one is a credit. So increase both, and you will not have any suspense anywhere. If they were overstated, reduce both. Reduce past reverse entries in both ledgers, and you will not have any difference anywhere to introduce a suspense. Okay? I think I've answered you.
Yes, please. Another question. As we are looking at the categories of journals, we said a cash book is one of them, which is a journal at the same time a ledger. Now, if an exam, is there a possibility that an examiner can categorize a cash book as a journal in any way such that now, okay, is there that possibility of having such? And if yes, I treat them under this rule, under this guiding principle of journals.
Now, there is no under correction of errors. The cash book will never be treated as a journal.
Okay, okay.
It is always a ledger.
Okay, thank you.
So it will always be treated in the first category of understatement or misstatement. Okay? Where a cash book is understated and you'll have to introduce a suspense somewhere. And we have seen it here on this transaction of the 90, where the credit side of the cash book was understated. This transaction where you were paying Mwamba and you credited less in the cash book, and you had to credit more, and the corresponding goes to the suspense. So it will always be a ledger in correction of errors. Guys, allow me to stop here for today. I'll share this recording with you this evening and this worksheet as well in your emails. Have a good night.